Qatar's liquefied natural gas exports are collapsing. We are seeing the 10-day moving average of Qatar LNG exports is just down to 33 tons, the lowest since the great financial crisis. And we're seeing that being really, really important as Qatar is the second largest LNG supplier, responsible for around 20% of global deliveries. And so even though most of it is headed to China, obviously also the American markets are highly impacted. And so in today's video, we do take a look at the most important technicals, fundamentals, and also macroeconomics to understand what is currently happening here to natural gas. Well, we have seen that low here back in the end of February, which actually marked a price of $2.77. We've seen that recent high here at $3.48. And so we're in this upwards trend right here with this trend line obviously acting as support, which we're currently retesting with this recent sweep to the low. But we're at the same time seeing a divergence happening between this upwards rally here at natural gas and cumulative volume delta moving to the downside. And so we are seeing that volume delta is really decreasing. We are seeing bearish pressure actually regaining strength here. And so that obviously could signal we could see a reversal here quite soon. Now, if you have a look at the daily chart, you can beautifully see that we are still at the lower band of this upward channel here in blue. We're seeing that volume here with the visible range volume profile is actually indicating that we're now retesting this volume area here down below at $3. We've recently seen that volume area here at $3.4, $3.5 actually being retested. And so we are currently actually moving in between those two volume areas right here. But to really understand whether we're going to see a long-term upwards rally here happening next to natural gas, or whether this might be the beginning of a deeper market correction, we can only answer that question by taking a look at the fundamentals and macroeconomics of this commodity. And so if you like this analysis, please make sure to subscribe to our channel, like the video, and also don't hesitate to ask questions down below in the comments or to just give us your opinion about the topic. Thanks for your support. Now let's start off with the weekly chart to really understand the historical drivers of this commodity. And what you can beautifully see here is that we've marked those past few sell-offs, those past few highs that we've witnessed here at natural gas. And you can actually see that we've seen divergences actually occurring between natural gas moving to the upside and the copper to gold ratio already moving to the downside. And so whenever we've seen that happening, that ultimately led to massive market corrections. You can beautifully see that here with the great financial crisis. We've seen that divergence where gold started to strengthen against copper. That happened before the crash happened. We've seen that coincide to natural gas still moving to the upside. But ultimately, we've seen this ratio here fall off a cliff, as also natural gas then did. Now, we've seen that repeat several times throughout history. And the reason why we are so alert right now is because we're seeing that happening once again. We're seeing natural gas prices still here overall moving to the upside with this longer term bullish rally here since this low in 2024. But we've seen this copper to gold ratio decline for quite some time now, as gold is strengthening against this industrial metal, which is copper. Now, this obviously indicates that we may already see the beginning of a flight to safety sentiment. And we do also have those other ratios, for example, the gold to silver ratio and the gold to S&P ratio, which are signaling quite similar things. We are seeing that the gold to S&P ratio is also one of the most important indicators to really understand the market sentiment and to understand the cycles that we are seeing here happening over and over again at natural gas. Because whenever this ratio starts to spike here to the upside, we've historically always seen that actually coincide to a deeper market correction. Well, why is this happening? Because the S&P obviously starts to weaken by a lot concerning the ratio with gold. Gold, as this safe haven asset, is obviously outperforming the S&P. Therefore, this ratio tends to rise when economic stress is entering the market. We've seen that sometimes playing out with this beautiful move to the upside. Sometimes this has also actually appeared by just a slowing rate of this going to the downside. And so we've just seen this ratio strengthened whenever we've seen that happening. Sometimes it has been a smaller spike, sometimes it had been a bigger rally here to the upside. But certainly what we are currently seeing is a stronger rally here to the upside. We are currently seeing that the gold prices are outperforming the S&P for quite some time. And that is just indicating a really important factor. We are seeing this flight to safety already appearing. And in fact, if you invert this chart right here, you can actually see the true nature of what we're seeing happening to the S&P 500. This is the S&P 500 if you don't measure it in dollars, but if you measure it in gold. There's a big difference between that because the dollar is obviously also an asset. The dollar can be manipulated. The dollar can actually move to the upside and to the downside, as gold can. But historically, gold has actually been more stable. And in fact, if you now measure the S&P 500 in gold, you can beautifully see those bear markets actually appearing quite beautifully. And in fact, you can see that this here is the COVID crash that we've seen happening. And so we've actually seen that gold prices have been moved, the S&P 500 has actually moved to the downside previous to this crash, right? We've seen that if you now actually have a look at the chart, you can see that we've seen that bear market. If you measure the S&P in gold, not in dollars, we've seen that actually happen since this high here in 2018. And similarly, we are seeing this S&P 500 measured in gold actually being in a bear market since arguably this high here in 2024, maybe even this high here in 2021. And so this is just beautifully showing you that the fact that we are seeing this not being reflected in the S&P right now is the fact that the dollar is certainly being devalued all the time, and that we are not seeing that being reflected because we are seeing all of this inflation actually entering this chart. Now, if you now have a look at the gold to silver ratio, this is where it really gets interesting, because this is one of the most important indicators that we know at Chronos. This is just beautifully comparing gold to silver. And historically, whenever we've seen the beginning of those crashes, that always coincided to a reversal. And so, for example, here with the great financial crisis, we've beautifully seen that play out with this spike here to the downside. Then we've consolidated, and then we've seen that move to the upside. And so gold really started to outperform silver. Similarly, we've seen that beautifully marking this sell-off here in 2011. We've seen that divergence happening once again with natural gas moving to the upside and the copper to gold ratio already starting to decline. And similarly, we've seen a bottom forming out here at the gold to silver ratio. Now, we've seen that happen throughout history, and in fact, it really seems like we're living in a simulation, as we're currently seeing quite similar things happening to the financial markets as we've seen it happen previous to the great financial crisis. We're also seeing this low forming out as we've seen that decline here recently with this gold to silver ratio. And that obviously is quite similar to what we've seen happening here with the great financial crisis. And in fact, if you have a look at the months, the times that we've seen that happening, we've also seen that bottom here in March. Well, this time it was a little earlier, but we've also seen that from the time perspective happen quite similarly with the seasonality. Now, we have all of those indicators. We do see that history is really looking to repeat right now. We are seeing those divergences with the copper to gold ratio and natural gas. We are seeing the gold to S&P ratio to spike, as we've seen this happen so many times throughout history. We are seeing the gold to silver ratio spike. And now if you combine all of those empirical indicators here on the chart, there seems to be no other way to argue that we do not see a recessionary or a deflationary crash happening in the next few months. We at Chronos are quite sure about this. We can beautifully analyze those cycles, and that seems to be the ultimate strategy, the ultimate method to predict the future, because that is the only way you can actually understand how the markets are actually behaving. And because we are seeing those beautiful cycles here at natural gas, you can actually see that that is happening throughout history. Now, concerning the short-term trends, we are also seeing those supply disruptions in the Middle East. We are seeing obviously those two scenarios right here. We could see some consolidation on this support at around $3, at this value area, at this zone where we've seen a lot of volume being traded. And then we could finally see maybe even a break or two to the upside once again or to the downside. Now, as we've just assessed, long term we are certainly bearish. But considering the short-term price action, we have to keep in mind that we are seeing those supply disruptions that we've just talked about. And even though most of it is headed to Asia, we're also seeing that certainly impact the natural gas prices here in the US. And that certainly seems to be able to lead to a lot of volatility here in the short term and maybe even spikes here to the upside. But considering the fact that we are seeing this divergence with the cumulative volume delta and natural gas, that could obviously also signal that we do see a break of structure and some bearish momentum also leading here in the next few weeks. Now, ultimately, it's hard to predict in the short term, but considering the long term, we are certainly bearish. We believe it certainly is a quite realistic scenario considering the fact that we are seeing cycles repeat over and over again. And so if you find this analysis helpful, don't hesitate to click the like button, hit the subscribe button, comment down below if you have any questions. Also check out our Discord server. Thanks for your support. It's really great what you're supporting us here on this channel at Chronos. Thanks for your support. See you the next time. Bye bye.